Hey traders, this is Trading Ideas on 20th January 2017, episode 13. Okay, I'm going to explain to you guys two currency pairs, very detailed analysis. We can anticipate the direction of the market. Okay, first is dollar yen. Okay, those who are like daily chart traders, they in their point of view, dollar yen is overall in uptrend. You see, it is in uptrend. So this is just a small correction and they anticipate market to go further higher. And by looking at the key level, there's a key level here and there is a very valid key level over here. Okay, probably slightly this, yeah. Okay, so market was uptrend because there was a sign of a lot of buyers entered. You see, a lot of buyers entered. So since the pin bar week is very long, so that indicate a lot of buyers entered. That's why the market have become bullish for a very long period of time. Okay, so on a bigger time frame, it's uptrend. And another point of view that we must look at it is, look at this, a sign of a lot of buyers. This is two bar. It was a sign of a lot of buyers entered. And why they entering there? Okay, this is the key level. Okay, this is the key level. You see why a lot of buyers entered there. Market tried to penetrate, failed, penetrated, retest, created a new high, retest again. A lot of buyers entered because there's a very good cheap price, a lowest price in this bullish candle, and a lot of buyers entering. So this is a buyer's point of view, you see. But let's look at the seller's point of view. Sellers will be looking, hey, there's a limitation here. Let me draw the limitation. Limitation. Okay, limitation, limitation. Okay, and the neckline is over here. Neckline. Okay, so what market have done is, in overall bigger picture, it's uptrend, but what market have done, a lot of sellers broke the neckline and retest again, and then they enter again. So it's already created a lower point. So if you see in the bigger picture, it created a lower low, lower low, lower high, then it created a lower low, okay, and lower high. And this lower high, if you look at from seller's point of view, they will take this from here to here at a 50 to 60%. There's a pin bar. A lot of sellers will enter the market. So we can anticipate a negative news for dollar, and yen will strengthen. Because why yen will strengthen today is, during the uncertainties, people will buy yen compared to dollar. So that has a potential for it to strengthen. But how far can it strengthen? That's a second question that we must ask. So for that, we go in a lower time frame, like H4. If you see in a H4, market created a very clear picture: lower low, lower high, lower low, lower high, lower low, lower high, lower low. For the first time, market created higher high. That means market is trying to reverse, but you got to observe this also. It formed a two-bar reversal here. A lot of sellers entered. So those who are H4 traders, they focusing this as a downtrend and they entering here. So we got to keep this in our mind, that day traders looking at, for upside break, and H4 traders looking for downside break. So how do we manage our trade in this scenario? Okay, I would reckon those who are trading, you can enter your trade here, sell trade, place your stop loss above this. Okay, you can anticipate market to reach this level because this is a very valid key level. Why I say very valid key level, you can see if I place continue this is a key level. Okay, let me change the color. You see, it's a very valid area. No, this area. See, it's a very valid key level, and a lot of price action story happens here. So I'm going to place it here, and I'm going to see what's the price action over here. And different traders, those like FIBO traders, they'll be placing and a FIBO from lowest to highest point. They'll be waiting for confirmation at this area. So since the key level is here, we can anticipate market to reach this level. If at all it form a lot of buyers entered at here, a lot of buyers, that means it's going to be upside pressure. But if it breaks below this, and since you're holding a sell position, break below this and create a new low, then the downtrend continues. And whatever we saw in a daily chart, this like market reversing will be creating the next lower low. So this is like this is the difference between daily traders and H4 traders who are looking at the chart. What makes the difference is how, as a price action trader, we going to manage the trade in between the daily traders and the intraday traders expectation. So we're going to manage like once sell here, once reach here, break even your trade, close 50%, allow the trade to grow. If it grow, then it's a bonus. If reverse, there's no risk. So for 2017, I'm going to manage my trade like this because we are full of uncertainties, and at the same time we are blessed with a lot of opportunities in the market. So I choose to look at the opportunities, not at the uncertainties, and I'll guide those who are following the entries by how to manage the trade. So hope you guys follow that and make a good profit. Thank you guys. Safe trade.